Welcome to the March 16th, 2026 Advance Report from McGowanGroup clients. Clearly, Alex and I have added video, and that's one reason you should subscribe on Spotify or be on the subscription list at networthradio.com. But the weekly update will now be video and audio. Wow, the podcast had just been audio, so this is a huge technology breakthrough. Shout out to Preston Lane, Director of Client Relations here at McGowanGroup Wealth Management. What a trading week.
It was crazy. Sunday night, you were texting me. Why were you texting me?
It was actually Sunday afternoon before the futures opened.
Okay.
All right, so the New York Post has a headline that Israel hits 30 oil storage facilities.
They were concerned about something else.
I thought they must have been going to Carg Island.
Futures open about 112, spiked to almost 120 immediately.
Well, I looked at the chart. That's why I texted you 112.
Yeah.
Right? Because there's no resistance between 90 and 112. This bunch of hedgy wedgies on Sunday because they're fancy drill baby drills, so they're short oil, right?
That's right.
And if you short oil futures, he who sells what isn't his'n must buy it back or go to prison. And they start to lose money. So everybody covers their shorts all at once because the hedgies are getting wedgies.
Yeah, it's a really light trading session typically.
Whoa.
You had a lot of algorithms, some risk control measures that came into the marketplace to cover those shorts before the open. That pushed the price up to where there was no more buyers, right? And then you had this huge range.
Look at that.
120 back down to 60, 76, 73. And of course the headlines, it was like an hour by hour. Headline this, headline that. We moved back from 76 to 94. That's a huge move in oil too.
And I'll give you some possible outcomes.
Perfect.
Here is the Dow, okay?
That looks like it's the opposite.
Great observation for inverse correlation, sir. And now, I get to Sunday night, I'm all the way down at 46,300. Oil moderates to 77, I go to 48,300.
Right.
See the equation? Oil up, stagflation, 1970s all over again. Oil down, everything's fine. So if the Iranian capability to close the Strait of Hormuz is stripped away from them and it reopens safely, then you would get oil down and a big relief rally. That's a potential. So the opposite would be the Iranians are successful at blowing everything up near the Strait of Hormuz and the Red Sea, and you get 120 oil, and you're probably going to see 10% as a minus for the year to date.
Well, they came out and threatened, how about $200 a barrel? But I think they're bluffing.
Well, they said a lot on their X account.
Yeah.
All right. Now, we'll leave that for the different news outlets because we're financial news. All right, so let's look at some of the impacts, right? First, gasoline actually is up 74% so far this year. March inflation is going to look terrible, right?
Yeah, that number alone is going to really bring up CPI. I think as analysts and market participants are going to really be looking at core. And if this is over by the time that CPI report comes out, then everybody's going to look at that as just a blip.
Yeah, you could get the Dow back over 50,000 or something.
Yeah.
So that's potential. Then you got earnings reports next month too.
That's going to be really good. It is for energy anyway.
So Cheniere Energy, they're the big LNG. So Qatar has a gift from the Iranians. They sent over drones and missiles that shut down the world's largest liquid natural gas export facility. Sent the price skyrocketing, the traders scrambling, and the LNG boats were getting phone calls, I would bet, to say, hey, we're going to reroute you to the highest bidder. Cheniere, being the largest exporter in the United States, this is the GP, general partner, up 31% so far this year.
Not a recommendation for your portfolio. What I will say,
to come down and get a plan and a tour, and we could also do Zoom.
Yeah, the time to have been, it's great to have energy in the portfolio. I believe the time to have added it was probably 4 or 5 years ago.
There's still bargains there.
There are, but
you just don't want to put everything Cheniere now that it's $257 over. That's probably a bad idea because you missed it. All right, there's the futures, right, for crude oil year to date, just to see the trend has reversed.
There were calls several months ago of crude going to $40 a barrel. I remember looking at that and I was like, I don't think that's really going to happen.
That is the hardest thing to predict.
Yeah.
I just look at the company. Do they have lots of positive cash flow so that they can pay me my dividend and buy stock back to increase the assets under control per share? All right, this is the S&P Oil and Gas Index, up 29%.
That's pretty good.
So, yeah, that took off like a scalded rabbit. That compares to the indexes, Dow, S&P down 2.5%, and the NASDAQ, representing tech stocks, down about 3%. And they're pretty close to 10% down from the recent high.
That's right.
After this week. So you're having a stealth bear market for tech right now as they adjust the multiples. And
private credit.
What is this?
Here you go.
So
that looks like a now.
Y'all may remember, if you're longtime listeners, one reason you should subscribe. We were saying last year, whatever Wall Street is pushing hard, you probably want to take a deep breath and read what they're trying to get you to buy. So here was the premise last year. Blackstone, BlackRock, Blue Owl Capital, all saying you should buy private credit because you're going to get a lot of interest, and then you put the money in there, but you can't get out, right?
Right. But you don't need to get out because you're getting a 9 to 10% yield.
Sounds good. I'll do it. And they go out and loan the money to all these companies. And we warned you because Double Line's Jeffrey Gundlach said, hey, private credit is taking all the C, stands for crap, C stuff.
Right.
You have three parts to the bond market generally. You got A, investment grade, B, high yield, and C, probably don't want to be there.
Junk.
And so, no,
Super
that's
junk.
junky junk,
That's
as opposed to junk with a Q,
right.
The traditional high yield. Anyway, the default rate has gone to near 6% in that basket.
Yeah.
They've started to take the write-downs. Now, Blue Owl was the most aggressive lender, and what happened here? Whoa, they go to $27 per share back at the end of 24, and now why is it $8.70?
It's $8.70 because they're having write-downs. This is the management company that manages the baskets of assets, so they get paid on fees. If their assets under management go down, even just because of an adjustment of the prices of the assets in there, they're going to go down. I think there's something else happening here. Al pays over a 10% dividend. I think that dividend is going to be cut because the assets in there are not going to be able to pay him what they expected to be paid.
Bose Weinstein at Saba, he came out, sent a proxy, what did he send? A tender offer.
Tender offer.
To all the private credit people. Now imagine if you put $100,000 into a private credit deal and you get a letter that says, I'll give you $65,000, 65 cents on the dollar. You're probably not going to put any more money in with them.
No, you're not putting any money in.
You're hitting the sell button, but they have these gates where the private equity, you can't get out.
You can only get out 5% at a time.
Everybody wants to get out.
And that's a quarterly redemption. You have to put in for it. You may get it, you may not. That's in the prospectus. So when they sell these, and they did try to get these in 401ks at one point, if you recall.
They were pushing hard, saying we need to put that magic in your 401k.
It's in the prospectus. It says there specifically, hey, we're only going to do 5%. We might not do it all the time. And if the answer is no, the answer is no. That's what they call gates.
Okay. So private credit, we warned you. That's why you want to subscribe. Here's the possible outcomes. You get oil back to 120, right?
Yeah.
Because the Strait of Hormuz is clearly shut down by the Iranians, or their capabilities are stripped and the strait reopens and you may get 70. Correspondingly, are you 45,000 on the Dow or are you well above 50,000?
Yeah.
I think that's our equation, and we'll keep you updated weekly here, along with where are the bargains? Not that.
Not that.
Not that yet. But we'll put it in the managed portfolios if it gets cheap enough and they're not going to blow the deal. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.